Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the glass and glass products sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The glass and glass product sector in Indian share market comprises of companies involved in the manufacturing of flat glass, container glass, specialty glass, and glassware used in construction, automotive, packaging, pharmaceuticals, and consumer goods. This sector is crucial for supporting infrastructure development, real estate, automotive manufacturing, and healthcare packaging. The key growth drivers for this sector includes boom in real estate and infrastructure, growth in the automotive sector, rising demand for solar panels, pharmaceuticals and FMCG packaging needs, and life cycle upgrades and growth in exports. The government supports this sector with policies like PLI scheme, construction and housing push through smart cities and PMAY, support for domestic manufacturing under Atmanirbhar Bharat, custom duty protections to reduce dependency on cheap imports, and promotion of renewable energy. The major challenges for this sector includes high energy costs, raw material price volatility, import competition, environmental regulations on emissions from glass furnaces, and capital intensive operations. So now in order to identify trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movement of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of 2 mid cap and 8 small cap companies. The first graph that I'll show you will show the yearly returns, whereas the second graph will show the monthly returns. So let's start with the yearly returns graph. So in this graph, this green bar shows the positive yearly returns, the red bar shows the negative yearly returns. The orange line down here at the bottom shows the cumulative returns. The green line shows number of months with positive returns, whereas the red line shows number of months with negative returns. Let's start with 2015. 2015 was a solid year for the sector. The sector managed to give good returns of 40.72% in that year with 8 positive months and 4 negative months. 2016 was almost a flat year for the sector with only 6.14% returns, 7 positive months and 5 negative months. The situation improved considerably in 2017 though, and the sector managed to give returns of 41.47% in 2017 with 9 positive months and 3 negative months. And then 2018 and 2019 were bad years for the sector, and the sector managed to give negative returns in both of these years. In 2018, it gave minus 30.01% returns with 9 negative months and 3 positive months. And in 2019, minus 22.81% returns with 10 negative months and only 2 positive months. But then the situation turned on its head in 2020 and the sector skyrocketed from minus 22.81% to 137.44% in 2022, and similar was the case in 2021 as well. This sector gave 137.44% returns in 2020, followed by 131.68% returns in 2021. In 2020, it gave positive returns 9 months, and in 2021, it gave positive returns in 10 months. I have never seen any sector performing so good in 2 consecutive years. More than 130% returns in 2 consecutive years. I have never seen that for any sector. 2022 was to a very good year with 51.43% returns. Although, in comparison to these tall, big towers, it is looking very small, but still 51.43 is a very good return for any sector in any given year. In 2022, it gave positive returns in 10 months and negative in only 2. In 2023, the sector still performed strongly and gave returns 33.97% with 9 positive months and 3 negative months. And 2024 too was a solid year with 27.45% returns, 8 positive months and 4 negative months. If we see the cumulative returns and follow this orange line, we can see that The 10 years cumulative returns are 1523.72, which is more than 16x in the last 10 years, which is not bad at all. Let's see the key takeaways. So the cumulative return is 1523.72, which is more than 16x. CAGR of 32.15. Very good CAGR. Any CAGR more than 30% is very good CAGR. And this too is for 10-year periods, not 5-year periods. If we calculate it for 5 years, it would be huge. So 10-year period CAGR is 32.15%. Net negative yearly returns only two times in 2018 and 2019. So a very acceptable number. Best year was 2020, and it was best just by a small margin. 2021 almost beat it, but eventually was not able to beat it. But in 2020, the sector managed to give returns of 137.44%. The worst year was 2018 with minus 30.01% returns. Positive to negative year ratio 4 is to 1, quite a good number. So the yearly returns graph is quite impressive. Let's move on to the monthly returns graph. This is the one. The green bars over here shows the positive mean monthly returns. The red bar shows the negative mean monthly returns. The green line shows number of years with positive returns, whereas the red line shows number of years with negative returns. Let's start with January. January, the average monthly returns for January is 1.48%, which is actually quite average. Five positive years and five negative years in the last 10 years. February and March are 2 months which have negative monthly average returns, minus 0.55% for February with five positive and five negative years, and minus 1.24 for March with six negative and four positive years. April, though, was a good month for the sector with 5.62% average returns, nine positive years, and one negative year. May, the worst month for this sector with minus 3.73% average monthly returns over the last 10 years, with seven negative years and three positive years only. June, a very strong month for the sector with 6.74% positive returns, eight positive years and two negative years. July, with 3.76% monthly average returns, nine positive years and only one negative year. So that is a good point. August, below average, 1.17% average returns, five positive, five negative years. September, average 2.08% returns, seven positive years and three negative years. October is a strong month with 6.97% average monthly returns, eight positive years in the last 10 years and only two negative years. November, another below average month with only 1.04% average monthly returns, six positive years and four negative years. And finally, December came at last, and but last not the least, this sector is the best sector. Sorry, this month is the best month for the sector with 11.4% average monthly returns over the last 10 years. Six positive years and four negative years. So, impression on me is that monthly graph is not as impressive as the yearly graph, anyways. But, anyways, let's see the key takeaways. So, the first key takeaway, cheaper months February, March, May. February, March, May, all three with negative average monthly returns. There were a couple of flattish months as well, like Jan, August, and November. Costlier months, April, June, October, and December. So, April, June, October, and December. Four strong months for the sector, and really nothing else to talk about other than these 4 months. So basically, these 4 months are the months which give some kind of returns to its investors. Otherwise, there is not much cheer for the investors in this sector in any other month than these 4 months. Finally, let's see the positive to negative month ratio. This is 1.67 is to 1, which is not bad at all. This means 1.67 positive months against every one negative month in the last 10 years, that is, in the last 120 months. So, not bad at all. This is at least a good point in this graph. That is all from my side in this graph. Thanks for watching this video. If you have liked the content, press the like button, subscribe to the channel, share it with your family and friends. And I'll be back soon with another video. Goodbye for now.